Do you plan on buying Tesla stocks with hopes of getting rich? If so, make sure to stay tuned and keep watching. Just like scientists claim that humans are said to evolve from primates, cars too transformed from two-wheeled vehicles to different variations of four-wheeled ones. Today, more innovations in the car industry arise. Said innovations include electric vehicles, or EVs, which are being manufactured by big companies, with Tesla leading the race. With the future in mind, a lot of people scramble to buy Tesla stocks with hopes of getting rich. This video will find out why buying only 3 Tesla stocks in this crash will make you rich. Tesla is an American automotive and clean energy company that designs, develops, manufactures, leases, and sells electric vehicles. On April 20th, 2022, Tesla reported Q1 2022 net income of $3.3 billion, a quarterly record exceeding Wall Street estimates as revenue surged 81% year over year to $18.1 billion. This, among other news that made it to various news headlines, might just be the reason why people want a piece of Tesla. It is common knowledge for people familiar with the industry that market forces change stock prices every day. Share prices change because of supply and demand. If more people want to buy a stock, demand, than sell it, supply, the price increases. That said, Tesla stocks fluctuate too. Still, Tesla stock traded above $1,200 per share in early January, which made it close to an all-time high of $1,243.49. Wall Street believes that the stock is worth around 100 times Tesla's per-share earnings, which are about 10 times more valuable than that of the stocks of traditional automakers. Again, stock markets are hard to predict and may rise or go down pretty fast. A Wall Street analyst at Goldman Sachs, Mark Delaney, increased his price target for Tesla stock in January 2022 from $1,125 to $1,200, while maintaining a buying rate. He also named Tesla a top pick for 2022 and called it the best idea in the EV sector. He further stated that Tesla holds the leading price in EVs. Through his employees, Tesla Inc. CEO Elon Musk said that he agreed with Cathie Wood when she stated that Tesla is worth $300 per share if they perform well. Cathie Wood is the founder, CEO, and CIO of ARK Invest, a company with $60 billion in assets that invests in innovations like self-driving cars and genomics, and manages several actively managed, exchange-traded funds at the same time. Wood stated in a recent interview that her base case on Tesla is around $3,000 per share, and continued to say that their estimate for Tesla's success has gone up. She explained that this is due to their market share that went up dramatically instead of going down despite other companies' ventures into the electric vehicle industry. ARK Invest believes that Tesla will be able to produce at least 5 million to 10 million vehicles as early as the year 2025. An email obtained from Tesla employees by Electric, an American news website dedicated to electric transportation and sustainable energy, stated that Tesla will eventually be able to deliver a fully autonomous ride-hailing network, which will be termed as Tesla Network, that will bring a lot of money as well as a high margin. Musk reiterated that he agrees with ARK Invest's $3,000 target if the company executes well, and further stated that a $3,000 share price will make Tesla's valuation at around $3 trillion, making it the world's most valuable company. As of today, Tesla is hailed as the world's most valuable automotive company, with over $730 billion worth. Cathie Wood is said to be on a buying spree of Tesla stocks as prices continue to go down. ARK Invest shed almost 0.5% of its position in Tesla when the company shares climbed and sold 8,100 shares with an estimated worth of around $5.76 million. Because of this, Tesla remains one of Wood's closely followed innovation-focused ETFs. Piper Sandler Companies, an American independent investment bank and financial services company, announced through Insider.com that they have decided to give Tesla love on Valentine's Day, emphasizing its buying rating on the said stock and raising its price target to $1,350. This implies that buyers can expect as much as a 55% gain on the company's share, updating its valuation to account for new deliveries, capex, and margins. Piper said that it expects Tesla to generate more cash since the stock has potentially more worth. Morgan Stanley's Adam Jonas, a renowned Tesla bull, stated that the current landscape for EVs is a race, and Tesla has been winning so far. He compared the EV industry to a marathon and said that Tesla leads at mile 21, although other companies are still at mile 2, while others are still tying their shoes, figuratively speaking. He supported this claim by explaining that recent records of car deliveries are proof that Tesla's positions remain strong and is becoming stronger. He supported this claim by explaining that recent records of car deliveries are proof that Tesla's position remains strong and is becoming stronger as the marathon progresses. He also revised the price target for the automaker shares to $1,300 from $1,200 and proceeded to predict that the delivery figures would reach 2 million this year. To make sure to be updated with our videos, make sure to hit the subscribe button and the bell notification. In 2021, Tesla delivered more than 900,000 vehicles and planned to increase that by 50% in the current year. Numerous analysts' enthusiasm for Tesla stock is focused on the company's operational expertise during the pandemic. It is a well-known fact that the world was almost at a standstill when COVID-19 spread across the globe. At the time, most car manufacturers faced numerous issues like chip shortages from supply chains. Despite this, Tesla pivoted between suppliers by rewriting its software to keep its factories working. It even opened new manufacturing facilities in Austin and Berlin, which is not an easy feat given the economy's downward spiral during the pandemic. These new facilities, added with that in Shanghai and California, will increase operational margins as well as scale to manufacture more vehicles. Moreover, the newly built Berlin and Austin plants allow an opportunity to achieve higher gross margins. As a clean energy company, Tesla's mission is to accelerate the world's transition to sustainable energy through increasingly affordable electric vehicles and energy products, which is why the Tesla Giga Nevada construction was put into motion. Tesla Giga Nevada, which is also referred to as Tesla Gigafactory, is a lithium-ion battery and electric vehicle component factory in Story, Nevada, is expected to be the largest building in the world and powered by renewable energy to achieve net zero energy. This structure is meant to solve Tesla's battery crisis. This Gigafactory is said to have a planned footprint of more than 1.9 square feet, which aims to ramp up production to 500,000 more cars annually. Why buy Tesla stock? According to a recent article published in Barron's Magazine, an American weekly magazine/newspaper covering U.S. financial information, market developments, and relevant statistics, now is a pretty good time to buy Tesla stock. Although some analysts foresee a crash and others expect gains of more than 100%, the debate is far from settled. But two metrics make shares of the electric vehicle leader look unusually attractive. Analysts say the average price target is about $984 for Tesla shares, implying gains of 35% from recent levels. The last time the metric looked that good was in March 2020, when the market sold off as the pandemic hit the US. Some may wonder what proves that buying Tesla stock will make them rich. For one, it was reported on December 28, 2021, that Musk disclosed Tesla stock sales totaling $16.4 billion since early November, amounting to nearly 10% of his stake in the company. Additionally, Tesla reported Q1 2022 net income of $3.3 billion, a quarterly record exceeding Wall Street estimates as revenues surged 81% year over year to $18.8 billion. Currently, Tesla stock sits at $761.61, which went up by 5.14%. With this information mentioned earlier and the data presented in mind, people who have the means and opportunity to invest in Tesla stocks should do so. Of course, only if they believe this is a worthy investment after conducting a thorough study of this industry. Furthermore, the duration of this video mentioned several known investors and analysts, and they have established experiences in their respective fields, so their words should mean something valuable. Their statements are carefully formulated before sharing with the public, so one can rest assured that they can be considered a piece of sound advice. Remember that investing in stocks comes with certain risks and good profit. It is important to note that before investing, you should carefully study where you are putting your hard-earned money and exercise caution every step of the way. To see more of this content, watch our other videos.